How's it going, guys? Today is Monday, the 14th of December. Today we're going to take a look at NIO, Tesla, Facebook, SPY, BA, and HSBC. This is Patrick, and you're trading with Prime. A little bit of housekeeping right off the bat. First thing I want to talk to you guys about is we are doing a donation to let me get the proper name here. I think it is Hospitalized Children. Yeah, so Toys for Hospitalized Children. I'm going to go ahead and put a link in the description of the video. Please feel free to reach out to them, make a donation. Gladly appreciated. Second thing is we do go live Monday through Friday, 5 o'clock p.m. Pacific Standard Time. Unfortunately, the power was out here in the neighborhood, and so we did not have a stream yesterday. I apologize about that. I'll try to get more videos out to you guys. I know we do like to see what is going on in the market. And so first thing I want to look at today, the market kind of pulled the old gap higher, get everyone to buy calls and go along the market, and then it sold off pretty hard at the end of the day. And first thing is the IWM. I noticed a lot more strength in the IWM. So not that I want to look at this chart, it's just that this was kind of where we were looking at as far as, the market gapping higher. And so this is the picture. It definitely looked like it was going to be a breakout. And I'm going to go ahead and draw this cute little trend line across the screen here. It broke out and then it sold off into the end of the day, and actually closed the day below yesterday's gap fill, the gap fill from Friday. So to me, that's pretty bearish. We do have to keep in mind we were in a bigger picture uptrend. That is something to take note of. It's something to pay attention to. This is the second time. Yeah, we put in a new all-time high and then we sold off. But again, we are above all three moving averages. It would not be shocking to see this thing pull all the way back, eventually pull all the way back to 170 area. But it's way too soon. I'm not trying to predict that. Right now, we're in an uptrend. We're above this trend line. So buy the dip until it doesn't work anymore. Let's go to the SPY. And this is something I want to look at. We actually had a trade today in SPY, and it was a day trade. It was posted in the Discord. By the way, if you guys aren't a part of the Discord, feel free to check it out. The link is in the description of the video. And the trade idea was off of the gap fill, and the gap that I'm talking about is on the daily chart. There was a gap from Friday. Since we gapped higher today, and I'm going to zoom in just a little bit so you can see what I'm talking about. And really, so we gapped higher. We opened the day around 368. We'll give you an actual price. It's around 368.64 is where we opened the day. We rallied a little bit, and then we found resistance at the high of this candle over here, which was the reversal candle from 12.9. And so we did find some resistance, putting us all the way back down, almost down halfway down the doji candle that we saw, the hammer candle that we saw on Friday. So yes, this normally under normal circumstances, this would be a good entry around halfway up here if you wanted to go long. Today is probably your last chance. I mean, you might have more opportunity tomorrow, the next day, to go long. But then again, I don't know if I would be willing to take this trade at the end of the day like this. And it's why I posted in the Discord under the alerts, that this SPY trade was going to be a day trade for now. So. And I'll give you reasoning for the stop loss price on that, and really kind of, show you what's going on. First of all, we are in this uptrend. You do see this trend line right here. We are definitely in an uptrend. Are we going to sell off below that? At this point, I would say it's based on the close alone today. I would say it's more probable. But then again, we have to give this market a little bit of credit. Every time we think that it's going to sell off below this trend line, it doesn't. It rallies like we saw on Friday. We saw previously that the market will just keep rallying. So that is a trend line to watch. If we do get below that trend line, if we find ourselves down here close to 360 area, and if we really break that support, 363.49, if we break below that, that would definitely open up the trade to the downside as far as a short trade. But until that happens, I don't particularly want to go short on the S&P 500. The reason why I gave you guys the price today, let's do this. Let me move this over here for you guys so you can, on the right, so you can see the price. So what we're looking at is the market opened up, it rallied, and it just kind of sold off all day. The thing is it started getting really close to this gap, and here's, you can see this gap from Friday. The closing price on that gap was 366.30. So what I was looking for was an imbalance, and I'll show you right where we took this trade. This was the area where we took the trade to the long side. It worked out for a little while, but it couldn't get back over the moving averages. Once it made this 5-minute closing price down here below 366.30, once it closed under that was your stop loss trigger, in my opinion. Take the stop loss. Yes, it did bounce a little bit more, and maybe it could have kept running, but the writing was kind of on the wall as far as this overall downtrend throughout the day on the lower time frames. Not that I usually trade the 5-minute, but we were trying to make this a day trade, and so for those purposes, I was trading the 5-minute. Pretty bearish close today. Again, like I said, to me it's more probable to see lower prices, but giving the bulls the benefit of the doubt, the bears really have to step up right now and prove that this was a bearish day, prove that this pattern overall is a bearish signal. The market is starting to roll. You start to see this a little bit where it's rolling over. And this is why we don't need to pick a top or a bottom. It's because as the market does this and it climbs and climbs and climbs, a lot of times traders will step in and try to short every high that they get to. Instead of waiting for the market, have the patience, wait for the market to roll over like it is now. There's plenty of time to enter short. We don't need to chase this down to the downside. We can simply wait for the break of support, a little relief rally, and then we can short either the high of the relief rally like the back test, or we can wait for the most probable setup is waiting for a lower low or a lower high. So we'll take it one day at a time as far as the SPY goes. The next one I want to look at is NIO. And I'm going to run through the rest here since we've talked already for a little bit here. NIO, we did take a long trade. I wasn't really wanting to speculate this, but because of where it was out on the chart and the kind of day that I kind of foresaw that it had a potential today. And so I don't know where you would really put this trend in here, but what I was looking at was a break of, let me get the little pen here. So I was looking for a breakout above this price area. We never got the breakout. We weren't even close. Maybe that will come tomorrow. Maybe it will come Thursday or Friday. Maybe it won't come at all, and we will simply get below this level. The reason why I chose this level as far as a risk versus reward setup is that this is the last chance to go long, because we do know for the most part, if we start getting lower prices below this $40 price level, if the chart starts giving us lower prices, it's most likely going to come all the way down to around 30 bucks a share, 31.62. Let me give you an actual price. It'll most likely want to either come down to 32.25 or all the way down here to 29.61. Those are the two areas to watch for next week. Let's see what the chart does right now. I'm not overly bullish on NIO as a company. I'm actually probably more bearish on NIO, but I'm definitely willing to take a trade to the long side, especially since we saw this run up consolidation, and now I'm looking for a breakout. But again, willing to short this if it gets below the price that we just talked about. Let's go to Tesla. And again, by the way, the stop loss on NIO today was 38.35. So if it got below that price area, then you should have been stopped out of the trade. Let's go to Tesla. I didn't post a stop loss for Tesla, so I apologize about that. And what we're looking at is, again, you see this massive run up. And you know what we could do here? Let's change the time frame here, put it in perspective. Let's do this. To really put it in perspective of where we are on the chart, how much we have run. You know, we pretty much ran up here from the March lows. You know, we're up around 770%. So it's probably at some point most likely going to want to drop back down here to the 190. And don't let me freak you out, bulls, because I know bulls will be smashing the dislike button here. Between 190, 270, even you know, let's give them benefit here, maybe even 410, this last breakout area. It is at some point is probably going to happen, but we don't need to pick and choose when that's going to be. In fact, I don't want to try to predict that. That's almost ridiculous at this point to try to predict where it's going to go from here. But what we're looking at right now is we're looking at taking this to the long side. We did see this run up in Tesla. It did break out of this channel back here. It had the breakout, it's run up, consolidate a little bit, ran up again, and now it's consolidating. You know, we could just let it consolidate in this price area. I did make a post today saying that I'm definitely willing to short against the high of 654.32. So as the price keeps coming up here, I'm definitely willing to enter a short trade against that high, knowing full well if we close the day above that high, to simply exit the trade and the short trade is off the table. But for now, let's go down to the lower time frame and I can show you guys what we were looking at. And again, if you have any questions, feel free to put it in the comment section, and I'll try to get back to you guys, or we'll do another video, or you can ask me when we go on stream. So we did a post about this yesterday, and this is what we were looking at. We were looking at a possible breakout, and there's two reasons why. Number one, the first reason why is we saw this price action find support down here at a gap fill. It ran higher and then it created a bull flag, whether that's this way or this way. It created a bull flag, and so we're looking for a measured move to around all-time highs. Let me clear all that off the screen now. Measured move to all-time highs. Second thing is we did have this downward sloping consolidation, which a lot of times we'll look at this as like a bullish or can be a bullish wedge pattern. And we did see this. I'm going to zoom in just a little bit for you guys here. So those of you who are on your cell phones when driving home, watching videos when you should be driving, you do see like this bullish hammer candle down here, and it is at support. It's at the low of this breakout candle. You know, we do have this wedge in here. There's so many reasons to take this to the long side that once we saw this Friday action, the last hour of the day on Friday, put in a bullish signal on Friday. Today, the price opened up around, give you the opening price. It opened up around 619. And what we did is we were patient. We're waiting. It's falling. And you got to understand the psychology behind this price action when it opens up here and then it looks like it's going to fade off, dip back down into the triangle pattern. Well, for us, it's risk versus reward. So you have a huge potential all the way up to 650 as a target. Your risk would be either right below the entry, or even back down into this triangle pattern, or even if you wanted to be really conservative, you could give it a little bit more room and say risk is around 598. We went ahead and entered on this back test. I'm going to go to lower time frames and really zoom in for you guys, so you can kind of see the let's look at the 15-minute chart. Now, this trade wasn't necessarily meant for a swing trade. This is more of a day trade. However, if you're still in this trade, absolutely fine. I still think there's a little bit more room that this can run, maybe up here to 654. Like I said, if it gets up here or even above this price, I'm willing to step in and short this with the full understanding that if it looks like we're going to close the day above the high of this candle, I will know that I'm wrong and I'm going to get out of the trade. So what we're looking at is maybe we'll see a little bit of movement like this. In intraday, it can look like it's going to run. And, you know, if we end up closing the day back off down here, it would provide is a doji candle, which was a reversal candle in itself. But if it doesn't, if it gives us a nice green bar and we close the day way up here, I will definitely take a stop loss and get out of the trade. I hope that makes more sense. We don't have to enter down here at the lows. We really don't. We can wait for the chart to break out and kind of show us what it wants to do. And in this case, it worked out. We had the breakout, and you know, if you're in the trade again, well done. Let's go to Facebook. Facebook, this is kind of what we're looking at. I like this. I don't necessarily like that it's hovering on support, but what I do like about this, and we're looking at the 2-hour time frame, what I do like about Facebook is that every time it comes back to this trend line, I'm going to draw it in. You know, you could put it really anywhere in here, down here or up here, it doesn't really matter. It's more conceptual. So what we see is you see all the reactions we have at this price. What I don't like is that it keeps bouncing on this. And imagine it like a ball. You throw a ball off of a 2-story house and it bounces on this. So you have the ball run up here and then it falls back. It runs up, it falls back. As it tightens up and it really starts falling down in here, and if this keeps happening, you have to understand the more times that it falls against this trend line, the more likely it is that the trend does not hold. So we do have to be mindful of that. The reason why I took this trade today was because, again, we're back down at support. It's as close to risk as you're going to get, with an upside potential of either the all-time high 304.67 or even the high over here around 297 are both good targets with a risk of a couple bucks. So definitely good on the risk reward side of it. Let's go to BA. So BA, I definitely like this chart. It's becoming more and more bullish as far as, you know, looking at the year to day, the daily chart. It is bullish. We have to take this into account that this consolidated for several months. And I remember, those of you who know me know that we were calling for well, we've been trading this up and down for the last however many months since the March lows. And a lot of people looked at this price action right here as bearish, even though it was selling off, selling off, selling off. But a lot of the trades we took were to the long side. I did not foresee this price action where with BA you saw that it sold off below this consolidation in here, sold off below. It did find support. We might have entered long here, but I think well out of the trade before it came back up in this area. We definitely were not expecting the breakout. Think of it like this: what should have happened, because BA sold down below this support area, what should have happened is it should have sold off to the downside. That didn't happen, and it rallied back up into here, creating the momentum where short sellers had to cover. It created enough momentum to gap higher. Once 3 million traders see that this has gapped above this several month-long consolidation period, we have to then begin looking at the measured move. And now you can see it more clearly of some sort of measured move in here. You can kind of see it up in this price area. However, current prices, currently speaking, I'm looking at this as more of a breakdown through this wedge pattern. And let's do this. Sorry for all the clicking and moving around. I hope this isn't distracting. What we were looking at today was we were looking at this movement up here where you saw this rising wedge pattern. And what I think is going on here is, personally, I think this was a breakdown. Even though it wasn't compulsive, it was more of a trading sideways breakdown, which isn't as convincing as if you saw a huge, red bar down here is kind of what you'd want to see. And it's basically traded sideways. It came back and it back tested once. It tried to back test again, and it has so far failed. So I'm looking at this as three failures. First of all, it broke the rising wedge. It tried back testing once. It failed. It tried back testing again. It failed again. But the difference is it gapped higher this morning, and then we sold off all day, and then closed the day at the low. So possibly lower prices. We do have to be mindful that it is at support right now. Even if it continued selling off, there is a gap fill down in this area right below this, which the price is around 224.39 area. But I think that this has potential to come back down to 211 for several reasons. You're at support. You're at a prior breakout area. Not only that, you have a 200 period moving average coming in here around 211.20. So something to be mindful of, something to take note of. Stop loss on Boeing was 238, so we shouldn't see price get above 238. In fact, now we could probably lower the stop loss down here to around 231, maybe even down here to 230.50 if you want to book profit. HSBC, I believe this was a stop out, and stop loss is 26.70, so yes, this was a stop out. To me, I was looking at higher prices. This has had quite the run up. We do see, a monster move in here. Something that's hard about this chart is that you do see a lot of gaps in here, and those could be great, but they like overnight gaps, but they can also really hurt you if you're trading heavily in this one. What I was looking at for this one was we were at all three moving averages. That's one of the reasons why. The other one is I was expecting more of a gap and go today, and then possibly a back test of this breakdown. I don't know if we want to make this a wedge or a channel or however we draw this in here. I was looking for a back test, and then I was targeting this 28.74 area for an exit on this trade. But of course today we sold off below the stop loss area, so we're no longer in the trade. Those are all the trades I'm looking at. Let me know what you guys are looking at for tomorrow. I have a bunch on the list. I wish I could go all night, but we're kind of running out of time here. If you liked the video, gain value out of the video, please hit the like button, subscribe, bell notification, so that way when we go live on Sundays, you guys won't miss a thing. Thank you guys. See you in the next video.